So the message is, if someone tells you, or if you hear that you might not be able to get something, or there's a delay, don't wait around to see if it's true. Don't listen to the excuses. Go and get your stuff, whether it be your fur coat in the example you gave, or of course in the case of the London bullion market. If they've got your gold, you want to be sure that you can get it back.
Friday, February 7th, 2025, Monaco 64, home of alternative economics and contrarian views. Good morning, Clive.
Hello, good morning, Mario.
Yeah, it's interesting. It's been an interesting week, actually, because the news about the Bank of England and the fact that they had a 4 to 8 week delay in delivering spot gold came out last Friday in the FT. So what I want to start with, Clive, and I'm going to share this screen here with you and the viewers, and this is like a meme. Yeah, I want to start with the London Bullion Market Apocalypse. Of course, LBMA stands for London Bullion Market Association, but apocalypse, is that the end of the London Bullion Market? I think, Clive, if you look at the definition of apocalypse is the unmasking, and I think what we're experiencing is that people are waking up slowly to the fact that the London bullion market is like a fractional reserve system, and this is why I put this analogy there, Clive. Maybe you want to explain to the viewers
Well,
how you see this.
let's start with what the picture looks like for those who can't see it because they're listening. A lot of people listen in their cars to you, Mario. So I see a picture. Is this Andrew Bailey? Who's the man in the picture?
Yeah, Andrew Bailey. Yeah.
So he's in a cloakroom, and there's a pile of mink and fur coats behind him, and there's a lady in front of him who's trying to get her fur coat. I think she's handed the token to.
She's handing it in, actually.
She's handing it in, right? And
He's giving her, the ticket.
so I suppose now she's going to hand her coat in. Is she going to get it back, Mario?
Well, I tweeted this meme, and I said this was at a LBMA gala dinner, and it was going to be hours there in the city, really posh place. They're having dinner, but she had to leave early because one of her kids, the babysitter, called and said there was a problem. And when she went back to the cloakroom, her coat wasn't there, because what they're doing at this LBMA gala dinner is that it was going to be about 4 or 5 hour event. They were going to the West End of London and lending out these coats for a couple of hours before the gala dinner was over. So this was
pretty much par for the course then.
that's right. So this was a problem for Andrew Bailey. And the reason why this is not supposed to be, well, it is kind of a joke, but I hope it explains well how the London bullion, not only gold market, but the silver market works. It's a fractional reserve system, and the bankers think it's normal, but we, the common people, have been kind of vindicated, I think, and I hope. And why do I say that, Clive? Well, because I've been trying to expose this precious metals manipulation for like 9 years. As you can see here, I've got a playlist. Some of you might know of GATA, is Gold Antitrust Action Committee. Bill Murphy, he's been trying to expose this. And a lot of people call us conspiracy theorists, but I think we might be yet vindicated. What do you think?
Well, I've been working for 50 odd years. I'm retired now, and one of the things I've learned over those years is if there's a problem somewhere, you want to be first in the queue. So if there's a bank run, Northern Rock, for example, would be a good example. You want to be at the front of the queue because you might get your money. Those at the back of the queue don't get your money. Same thing with Lehman Brothers and countless other situations. When the banks were going down, clients would ring us up and wanted their gold. The first ones in line, they wanted to buy gold. We could buy the gold from the refiner and get it delivered the next day. But after a day or two and people were still asking for gold, the refiners were telling us, sorry, we're overwhelmed. You've got to wait 14 or 15 days. You can imagine the stress and panic that created because the entire banking system might go down at any point. So the message is, if someone tells you or if you hear that you might not be able to get something or there's a delay, don't wait around to see if it's true. Don't listen to the excuses. Go and get your stuff, whether it be your fur coat in the example you gave, or of course in the case of the London bullion market. If they've got your gold, you want to be sure that you can get it back. So right now they're not. You've kind of missed the chance because they're saying that all the slots are taken and anyone who wants their gold can't get it. So far they say they've delivered out only 2%. Only 2%
Yeah.
of the gold. But what does that mean? Does that mean the demand is for 20% and they've only delivered 2%? Or does it mean that 2% is nothing, don't worry, it's only 2% gone? I don't know what they mean. But the bottom line is there's no smoke without fire. And if you're in a cinema and you smell smoke, you want to start moving towards the exit before everybody else.
So did you hear about that guy, Dave Ramsden?
Oh yes, yes. So yeah, what did he say? Why they can't get the gold?
It
There's a
told-
lorry in the way, or something like that. They can't
That
get the
was
gold.
one of the comments. Someone left a lorry at the gate of the Bank of England, so they couldn't get the gold out.
And it's too heavy.
Yeah, and yeah, he said he. Well, I don't think he said that about the lorry, but someone made a comment, just joking. But he did say, "Well, gold is really heavy, so it takes time," which is really a really bad answer. And he's supposed to be the deputy governor for financial markets, and I looked at his biography on Wikipedia. And Clive, would you be surprised that he's never worked in the financial markets itself? He's just been a bureaucrat. So I don't think he sounded very nervous when the reporter asked that question about the gold.
Well, here's a lesson for anyone who'd like to be on a board of directors. First of all, you better be jolly good chums with the people who are on the board already. And secondly, it doesn't matter about qualifications. What the people on the board of directors actually want to hear from you is that whatever happens, you will support them. So people put in place on the boards of directors of big companies and also institutions like the Bank of England probably and so on, they put in place, and I'm not saying these two are friends because I don't actually know the situation, but I'm speculating here, they put in place people based on their loyalty to each other more than their technical qualifications. So this guy, Sir Dave Ramsden, obviously he's knighted, so he's a very important person. He's second in line to Andrew Bailey, the governor of the Bank of England. He's the deputy governor, so a very important person. And I think it's disappointing that he didn't come well enough prepared to answer the questions as to why the Bank of England is not really able to deliver the gold which is being demanded.
Yeah, he sounded very nervous. Should we play a little bit of that clip or?
Yeah, I think that would be. I think any bit is worth listening to.
Yeah,
You only have to listen to
let
a couple of seconds to know that there's a problem.
let's have a look here.
It's the bank's vaults because of the nature of our approach to the gold. So, I mean, the first thing to say is, and I think this is broadly known, but we have the second largest stock of gold in the world. Over 400,000 bars of gold at the moment. That's gone down a bit since the end of 2024, reflecting the market conditions that you're talking about and have been a feature in the news. But the stock has gone down by about 2% since the end of. So that's important to keep that in perspective. And
Yeah, Clive, it's gone down 2%. So why is it taking 4 to 8 weeks to deliver? Anyway, let's
I mean,
continue.
I suspect, and I don't know this, but I suspect a lot of that gold will have been leased. They'll led to the bullion banks who have leased it out.
Yeah.
And if you want to deliver it back to the original owner, you've got to get it back from the people who borrowed it. Now,
Yeah.
the question is it that they won't return the gold, or is it that they can't return the gold? Or is it there all along and they've just got logistical problems? They can't find enough Brinks Mat vans to deliver it. I don't know.
Let's continue just a little more.
US gold market has been trading
Let's
counterparties as it all got the delivery slots, they all stressing compared to some of the markets we usually talk about. I mean, orderly process, it is worth stressing compared to some of the markets we usually talk about. I mean, it's an obvious point, but gold is a physical asset, so there are real logistical constraints and security constraints. Getting into the bank for me this morning was a bit trickier because there was a lorry in the bullion yard. I mean, that's
Oh, there you go. It was him. You were right.
how it, yeah. But that's just the reality of it. It takes time, and the stuff is also quite heavy, as you know. So,
There you go. They even
I
laughed.
think I've heard enough of that one.
Yeah,
As I say, what he's saying probably is quite true. They're not geared up for lots of deliveries. People don't normally ask for their gold back, but suddenly everybody is asking for their gold back, and they're not geared up for it. That's probably true. But just in case it's not, I would want to be at the front of the queue.
that's right. That's right. And that means, of course, that you want to get physical gold if you're thinking about it now while you still can, because the retail market is, how can I say, still functioning quite well. It probably will feel the tightness that the wholesale market feels, Clive, and that's
And
why.
then we've got the hedge funds out there, Mario, and I think the hounds can smell blood.
Yeah, or the sharks as well, isn't it? They can see the
Yep.
blood in the water. So if any of you have been thinking of starting to stack gold and silver as well, I mean, check out my affiliates. They will help you if it's the first time or if it's not the first time. And they're in the description of this live video, excuse me. So in the US, it's Miles Franklin. And in the UK, it's Gold Investments. Clive, so do you think I guess this is the question now, whether there is a bit of squeeze, we have to admit, but will it be the mother of all short squeezes, or is it gonna be able to be orderly? What's your feeling?
Well, if I had been sitting there, I would have immediately calmed the market by saying, your gold is safe with us. How would you react to that, Mario?
I would probably think it's not.
You'd probably think, why is he saying it? Yes.
Yeah, yeah.
So no, whether there's a real problem or not in terms of the bullion, they're getting be able to get their hands on the bullion to deliver it, or whether it's a logistical problem. I'll go with the logistical problem, but I don't have any gold at the Bank of England, and if I did, I'd be trying to get it now just to be fair. Like in the cinema, you smell a bit of smoke. It might just be someone with a sly cigarette under the seat, but you're not sure. You want to be edging towards the exit.
Yeah, there's a story. I've got a book here about the Rothschilds. It was written in the late 1800s, and there was an episode in the 19th century where there was worries about the Bank of England paying gold, just like now. And Nathan Rothschild, he got loads of £5 notes. Those were the biggest notes at the time. And he went to the Bank of England cashier and started taking out sovereigns uh, just to test them. So there you go. But I don't think they have private accounts anymore. I mean, you and I couldn't open an account with them, and they definitely would not pay back in sovereigns. Um,
Be worth a try.
yeah,
I'd love to have an account at the Bank of England, but as you say, they probably don't do it.
yeah. Clive, I sent you an article this morning, and I saw it came out actually 4 hours ago, and even the FT, who, well, you probably know about this. In 2004, they said that gold was finished. They said the pointlessness of holding bullion continues to sink in, going gold. But now, one of their major, let's say, reporters or Jillian Tett, she's written this, and I'm just going to share it here quickly. And so there you go. this is becoming more and more of a story. Gold glitters as the unimaginable becomes imaginable. U.S. president wants to weaken the dollar while preserving exorbitant privilege. So they're talking about the fact that the gold is on the Fed's balance sheet is only valued at $42. It's actually $42.22, but I'm not gonna. And that if you revalued it to the current market price of around 2,800, it would be worth around 800 billion. I think, yeah, they have about 261 million ounces. And yeah, and they talk. I think she talks as well about what's going on in the last week with gold, because there's been a lot of speculation that maybe the Fed and the Treasury are repatriating a lot of the gold that the U.S. might have leased, and that's why a lot of gold is going to New York. So I want to see what you think about this, Jillian Tett.
Well, if I may interrupt this program for a small second for an announcement, which has just hit the wires a few seconds ago. I just refreshed the Central Bank of China's Foreign Reserves webpage just to let you know they've been buying gold in January. So that's the interruption to your program.
How many tons does it say?
Well, I haven't got the figure. It's all in ounces, but well, actually, it's not even in ounces. It's in thousands of hundreds of thousands of ounces or something. So I can't tell you the figure, but it's gone. The headline number has gone from, and I don't know what this is because I haven't translated it from Chinese to English, but it's gone from 7.3. It's all in Chinese, by the way. It's gone from 7.329 up to. Let me just bring that up. 7.345. So it's not much of an increase, but it's nevertheless purchasing more in the month of January. But I'm not sure whether
that's only the official purchases, isn't it? Because we know
yeah, that's right. It's official. But what it does show is that they are, even though gold is at an all-time record price, they don't care. They're buying.
Yeah.
Yes, coming back to revaluation of the Americans' gold reserves that we were talking about. The way that would happen now, a lot of people don't know who owns the gold. A lot of people think it's the Federal Reserve. In fact, the Federal Reserve owns something called gold notes, which are not gold and not redeemable for gold and not linked to the gold price. The gold notes are for a precise amount of money, and they were issued to the Federal Reserve by the Treasury on the 31st of January 1934, when the US government passed a law which basically said all the Federal Reserve's gold belongs to us and they get lawful currency in exchange called gold notes. So the Federal Reserve has got, and you can check this on the Federal Reserve's website, just type in something like Federal Reserve owns no gold, and you'll see on their own website they are quite clear about it. So all the gold is actually owned by the Treasury. Now, what could the Treasury do to reduce its debt? Well, of course, they could just sell the gold, but that's not going to happen. But they could play the same trick as the bank, as Rachel Reeves is proposing to play with the British debt, which is to offset the amount of debt with financial assets, i.e. reduce the debt by the level of financial assets held, so that the debt levels seem smaller, which means that you can now borrow more money without getting back to the old level. So what could the Federal Reserve, not the Federal Reserve, what could the Treasury do to, first of all, they could play the same trick and they'll say, we're now counting our liabilities as net liabilities, but to do that, it'd be in their interest to count the gold as an asset, but not at the official price of $44. They'd have to count it, $42. They have to count it at the market price, and therefore, to reduce the debt as much as possible, they need the market price to be as high as possible. And to get the market price into their books at the right price, they have to do a sale and repurchase agreement. So what they would do is find a nice, friendly bank. It could be Goldman Sachs or it could be the Federal Reserve, depending on who's willing to cooperate with them. And they sell the gold for, let's say $3,500. I'm just giving a random number here, and they immediately buy it back for $3,500.01. Now they have an asset on their books which is priced at 3,501 cents, which now can be used to say that the level of their debt is less than it really is. And that's how I think it could be done. I mean, I'm sure there's other ideas out there, but this is who is it? Scott Bessent, who's proposing that they mobilize the U.S. gold reserves in some way. Now I think he says that would knock off $800 billion off this 35 or 31 billion trillion debt. So it's not a lot, but it would help. And obviously, if they put the gold price up,
that's at the current market price. Yeah.
Yeah, if they put the gold price up to, let's say, double where it is, it would start to move the needle a little bit.
Yeah, and the other thing, I think Luke Groman or someone looked at. Actually, no, it's a book I have here by Jim Sinclair, the Pocketbook of Gold, and he wrote that in 2010, 2011, and at that time, the U.S. public debt that was held by foreigners was about 3.2 trillion. So the gold price would have to be revalued if you're going to back that 100%. Would have to be revalued at the time to like $12,000. But I've looked, Clive. Right now, the public debt held by foreigners, is about $8 trillion, and if you were to back that, let's say by 40%, historically, that's a ratio that's been used. The gold price would have to be 12,300. And Scott Bessent said in November before the election, he did an interview on YouTube with a guy that used to work with him. He has like a macro YouTube channel, and he said that he senses Bretton Woods-like realignment coming, and the only way you can realign international accounts of different countries is through gold. It's nothing else, right?
Yep. I mean, Mario, just on the maths you did to revalue the gold based on a 40% coverage. Well, what if I own a 30-year bond at 5%? Well, that's going to earn me over the next 30 years 600% in interest. Is that going to be covered by gold?
Well,
obviously not. So they'd have to, it would, if they allow for the interest on this national debt, which isn't part of the debt, the interest that they have to pay in the future that they've obligated themselves to pay.
That's right.
Is not part of the debt at all.
Maybe that's why they need to cut back as well. I guess there's this gold back bond that they're talking about, Judy Shelton has proposed, but that wouldn't be the whole. They would be issuing some of those bonds in gold, backed by gold, but not all of the national debt. So, and the other thing, Clive, back in 1925, I think it was, the Chancellor of the Exchequer here in the UK, Winston Churchill, went back on the gold standard, but he went back on the same rate prior to World War One, and the problem with that was that during World War One, the national debt grew from 600 million pounds to 7 billion. So going back at the old rate was really deflationary. So I think they might err on the side of a lot higher prices if they're going to do this.
I mean, they couldn't do it unless they allow the gold price to rise to a higher level, because people would say you don't have enough cover. We don't know what the correct amount cover that a central bank or a government should have. I mean, that's up for debate. In the old days, it was near enough 100%, but that doesn't, that wouldn't make sense in the modern society. But if they don't have enough cover, nobody's going to trust it. And if they're running deficits, nobody's going to trust it either, because they're going to say if you're running a deficit, it won't take long before you're so deeply in debt you can never hope to repay us in gold.
Yeah, maybe that's why they're pushing this Doge and also pushing the tariffs. They want to be in balance, not just in the budget, but also in the current account with other countries. But do you think what we're seeing now with all the gold, a lot of physical gold going to New York, do you think that signifies that the U.S. Treasury is through the Fed and through the banks is bringing back a lot of the gold that they leased out to the bullion banks, and so they because they need to back this, the treasury gold at a higher price. But if the gold isn't there, if they're going to issue gold-backed bonds, they need to prove to the world that they have the gold. And couldn't that in itself also allow the market to discover the real price of gold? Because I think this LBMA COMEX mechanism we've had has been controlling the price, and it's not the real market price.
Well, what you're saying is a possibility that there's let's say, a secret operation going on to acquire a lot of gold under the table, so to speak. And one of the mechanisms to do that would be to have lots of accounts at lots of banks where you've acquired this gold. But I think it'd be hard to get away with it secretly. So I would put that more in the conspiracy camp. What I think really is going on with the gold moving to New York is there is a short squeeze. A lot of people are short gold. I mean, the bullion banks have lent the gold out. Now they're having trouble getting it back, and everybody wants to be first in line. And it doesn't matter whether they're going to get it back. I heard that there was a whole bunch of gold which was shipped to India to be sold to Indian customers. It was waiting in the bonded warehouses, and they shipped it back to New York because rather than sell it to the Indians, who often pay a higher price for gold, it was worth putting it on a plane and flying it to New York. So I think what's happening is there are people, and it's probably not people, it's probably large institutions, including government institutions and hedge funds, who are effectively short. The price is going up. They need to run for cover because they're going to be asked to deliver back the gold they borrowed, and they're trying to get their hands on it by fair means or foul as fast as they possibly can. And that's why there's a queue to get your gold at the LBMA, and there's probably a queue at lots of other places, I suspect.
Yeah, I mean, I'm not sure whether what I've said is conspiracy theory or a lot of speculation, Clive, because Donald Trump issued on October 4th, 2018, in his first term, something called FASB 56, and it's to do with classified activities. And basically, it says that the U.S. government and also big corporations, they can do things in secret, accounting wise and transaction wise,
Okay.
if it's in the if there's a national security interest. And one could argue that gold is a national security question.
Oh, yes, definitely.
If
Definitely.
you don't have the gold, you're FUBAR, as the old expression goes.
Sorry, Mario. Fubar is what?
I can't really say it.
Oh, okay. I can guess don't say the first letter anyway.
Uh, the first two letters you can kind of work out, and then beyond all recognition. They used to use that term during World War II, the American soldiers, when someone was unfortunately killed.
I got it. Yeah, I got it.
Yeah.
I mean, we
Injured.
could get a nice. We've just seen for the World Gold Council the publication of the gold holdings per country and which countries were buying gold in 2024.
Yeah.
I can perhaps just read you the list. I could show it, but
Yeah, let
I'll
me
just read it.
no, just read it. Yeah, fine.
It's and I'm going according to the size of the purchases. Biggest first: Poland, Turkey, India, China, Azerbaijan, Czech Republic, Hungary, Uzbekistan, Iraq, Ghana, Qatar, Serbia, Georgia, and those are just the beginning. The list is 26 countries long of net buyers of gold. Now, did you notice anything interesting about those countries?
Well, they're all like not in part of the West.
Exactly, they're not. They are countries which, let's put it mildly, and say they are not the strongest allies of the United States.
Yeah, that's right. And I think the US is waking up to the fact that if they want to counter BRICS, they need to strengthen the dollar. Well, they're going to weaken it, but they need to get the gold back because they suddenly realize, that's my theory, that wow, we're supposed to have 8,100 tons, but it's not here. So that maybe that's why they're trying to get it back. Clive, yesterday the Bank of England cut rates, even though inflation's running above target. And but I saw this headline here on the internet, and I thought it was interesting because it seems to be all they care about. Because it says Bank of England cuts interest rates to 4.5% and boost to 600,000 mortgage holders. I think that encapsulates the whole problem with this system, that they need to keep inflating despite the fact that inflation's running high. Because if they don't, the economy implodes. Is that, and then Clive, the other thing as well is that we're seeing UK house prices today rose to record highs, and the average, and also the FTSE. But I looked at the FTSE yesterday versus gold since 2000, and it's gone down 86%. So it's weird because our economy is doing so badly. There's talk that we're in a recession, but we're seeing these indicators like house prices and the FTSE go up. And some people might argue, well, that they're thinking ahead, the economy is going to pick up again. But I think it's more of a sign that the currency is sinking really quickly. What do you think?
Prices of things which are in limited supply, like houses, rise when more people can afford them. And the reason more people can afford them is because there's more people who've got enough money or enough to put the deposit down. And why have they got enough to put the deposit down? It's because the Bank of England and the British government, the Treasury, are going, the Treasury is going into debt. The Bank of England is printing money. And as the Treasury goes into debt, they get poorer and someone else gets richer. So out there are more people with enough money to buy a house at £300,000 than there were 2 years ago. Hence, house prices hitting an all-time record. Now, the counter argument to that, of course, is that interest rates in the UK are the highest they've been in decades. Despite the cut in interest rates to 4 point something, the what I read in the papers this morning, that mortgage rates are still stuck at around 7%. Especially if you're taking out a 5-year fixture or a 6-year fixture on your mortgage, because longer term interest rates, that is the rates on gilts, have a much higher, larger influence than the overnight rate. So even though the overnight rate, the Bank of England rate, is coming down, the yield on gilts is not coming down very much at all. I mean, certainly it's up since they started raising interest rates. And the reason for that is people think that these cuts in interest rates will have to be reversed due to the high inflation.
Yeah.
Higher house prices, higher wages. It doesn't really matter what you look at. The price of everything costs more than it used to. And so they're expecting it's only a question of time before the interest rate policy reverses itself, and those bond yields are reflecting the view of the bond market as to where future interest rates will be. And that impacts mortgage rates, i.e. the highest in decades.
Yeah, so let's wrap up here. First, we're going to look at this post on Twitter or X. Just Dario, he follows me, but anyway, he said something interesting. The Bank of England cut rates while increasing their inflation expectations. If you think they did this to support UK economic growth, then remove your beer goggles. BOE run out of gold leading in the market inventory it didn't own. and is now short. BOE is actively injecting liquidity into insolvent financial institutions to keep them afloat without disclosing who gets the money. UK finances are broken and they cannot afford to get going without drastic changes. Once upon a time, what the BOE just did was called currency devaluation, and that was the typical behavior of a broken central bank at the expense of those who have a saving in the bank. Meanwhile, the stocks are cheering up to this. Yeah, like the FTSE's making new highs, and I'm going to show you the price of gold as well in pounds, and it's really interesting. So there's the ship is sinking, and the parts of the ship is going to the moon as well. And it's weird, Clive, because I showed you this before. This is the price of gold going back to the early 70s in pounds, quarterly. Doesn't it look a lot like that ship?
Oh,
What
of course, everybody's rushing into the most attractive part of the market, and that's the gold market on the far right hand side. We're seeing the gold price the starting to rise faster than it's been rising for some years. I mean, it actually did that. If you look at your chart here, it actually did that from 1971 to what 1978, is it something like that? 1979, 1980. And then it went to the doldrums for a decade, and then it seems to have done it again, starting at about 2001 or 2000.
2005?
2000 it starts again.
2005, yeah, 2000 it bottomed,
Well,
but
it slowed 2005, and then it accelerated, didn't it, when it got to about 2007?
the other thing, if you stay in this ship here, in this part of the ship, or even this one,
The bottom end, underwater bit.
yeah, you're already, you're going to be in trouble. You need to get here and even jump off onto the gold lifeboat or silver lifeboat. And this is what this chart is telling us. Don't get stuck in here. So, Clive, any final thoughts for the viewers?
Well, if you are the sort of person who likes to pay insurance, for example, fire insurance on your house, you're going to be a fool if you're not having the other type of insurance you should have, which is at least a small amount of gold and silver coins where you can access them. And anyone who wants to contact me, write to me on LinkedIn. I'll be happy to reply to your questions about finances and investments generally.
Yeah, and also I wanted to say that some people have been, there is an email on my YouTube channel, but that email is for people or companies that want to contact me for business purposes. I've been getting sometimes emails there asking me loads of questions, and unfortunately, I can't answer all of them because there's so many of you. And the way to get to me privately is either on Sunday during the live stream that starts at 8 p.m. London, or you can join my Patreon for as little as $1 a month, which is nothing really. And then you can ask me the questions. And my Patreon, the link to my Patreon is in the description as well. And Clive, with that, I'm going to wish you and the viewers a great weekend.
Thank you, Mario. Good weekend. Thumbs up from all your listeners and to your listeners. Thank you very much. Bye bye.
Bye.